For me, if the market's going to be extremely volatile, right, or uncertain, but if valuations kind of bake that in for a specific stock, right, then I'm okay, honestly. Then I will take those bets that, okay, look, this is today in down cycle. And honestly, if you look at my portfolio, we have some loss-making companies as well, with a very clear understanding that these companies are today in down cycle, right? So we're buying those companies, right? And why are we buying loss-making companies, right? Not that we have some great insight that this will turn around 1 quarter, 2 quarters down the line. There is some view around that, but it is at best a view, right? So, but you do know that valuation comfort, you are seeking much higher valuation comfort. If that valuation comfort comes through, then you kind of try and manage the other things. So that's how we think about it. Beyond a point, um, to build a portfolio with a view that this will happen, especially on the macro side, it's, I think, tough. So which is why the framework as well, that don't have a style skew, have a very well spread, diversified kind of exposure. Um, and if you look at healthcare as well, the healthcare also I run in a very similar fashion, to not have a big style skew, whether value or growth or so on and so forth. And which is why the focus is a lot more on bottom up and a lot less on macro. Of course, there is a view on the macro, but not a very large weightage as far as the portfolio build is concerned around the macro.